Gold, a precious metal that has been used as currency, jewelry, and other art throughout recorded history. The price of gold fluctuates between supply and demand, but as of today, the 26th of January, the price of gold is around $1,830 per ounce. People are buying gold as a hedge against inflation. It's a hedge against a potential recession, and with high inflation rates and high interest rates, it's becoming a very, very obvious thing to invest in, judging by the rally. But let's talk about the capitalization of gold. There's a lot of it. $9.6 trillion is the estimated value of gold. This is unknown though, because of the amount of gold in circulation, and it isn't on a centralized exchange. When it comes to alternative investments, gold and Bitcoin and other crypto assets become a very, very good alternative versus the likes of stocks, property, and even art. If you've not yet done so, check out my Patreon below. It's a community and also a journal of what I do in the market. So let's compare it to Bitcoin. Bitcoin is a digital currency, very, very different to physical gold. However, there is some properties that do alike to it in certain environments, right? So let's go through them. First of all, gold has been used for thousands of years as a store of value. It's been used for a very, very long time. And as I said before, it's used in jewelry, currencies, and other bits of gear now. Your teeth, essentially, oddly. With Bitcoin, though, it is decentralized. It is done through a peer-to-peer network utilizing blockchain technology with a ledger. It's a lot easier to move around than it is for gold. Can you imagine how much gold it would take to move a lot of money? Not so much how much, the weight of it. It'll be quite heavy, won't it? Let's be honest here. Whereas, guess what you can do with the world of crypto? You can put it on one of these bad boys, right? One of these ledgers. They're very, very helpful. In terms of the supply, though, with gold, there's approximately 170,000 tons of gold mined. We don't know how much more's left. There could be a lot more out there as well. However, Bitcoin, 21 million is the maximum supply. Already we've got 1 million out of action in Satoshi's wallet, and possibly another 3 to 4 million lost on exchanges. So we may be looking about 13 million out there at the moment, and not that much more to mine over the next coming 50 to 70 years. So Bitcoin is highly volatile versus gold. Gold investors, if you bought last year, you're laughing right now versus Bitcoin investors, right? For obvious reasons. However, the quick money is in Bitcoin for obvious reasons. It is a lot more volatile. However, the store of value and the safety of investments, gold is probably your answer. With Bitcoin being relatively new still, only 11 years old, it's still untested and it's never been through a recession. Which brings me on to the next point of recessions and why maybe Bitcoin and gold could be moving together as a bit of a safe haven. So altcoins and cryptocurrencies, they often go up with Bitcoin. It depends on what's happening overall in the rest of the market, but usually when Bitcoin starts to go up and shows confidence, the whole market goes up as well. However, altcoins and cryptocurrencies tend to go up a lot faster because they're more volatile and they have a lower market cap. Correlation, number one. Bitcoin is often seen the benchmark for the cryptocurrency industry. Why is this important? Because when the volume is going through Bitcoin and it's green, most of the altcoins are as well. USD pairs matter. Number two, investment flow. Because Bitcoin is the most liquid and the most volume profiled coin, it's the obvious one for people to go through. And if it is green, it shows confidence that money is returning and it's a good bet to invest in cryptocurrencies. In the last, 3 to 4 weeks, it's been really, really good for the crypto market. Bitcoin's been on a little run and the altcoins have ran with it alongside the other narratives around it. So when confidence is high, people start investing. And hedging, the last one. When Bitcoin goes up and people have got their profits, they then diversify into altcoins. They move their money, their profit from Bitcoin and into the obvious altcoins that they want to pick, which means more returns. So the capitalization of the cryptocurrency market often changes because of new releases, because of rug pulls, because of bankruptcies and all kinds of stuff. It is estimated at the moment today that it's $1 trillion. Quite a lot. However, it has been $3 trillion not too long ago. And this is where we need to start comparing the overall market cap between gold and obviously Bitcoin in terms of the potential of where we could be going in the future here. But let me just stress, it's important that you note that the market cap is a bit of a fumbling topic because one, with gold, we don't know how much is mined. So that's a big, big red flag. Secondly, with cryptocurrency assets, There's a lot of dodgy coins out there. There's a lot of random stuff, and there's a lot of like bankruptcy kind of messes that we've got that still need to be resolved. So it's not the best metric, but it gives you a good little guide in terms of how big the size is of each individual market. Before I go onto the screen, just want to let you know that my company Learning Crypto has courses. New ones are coming out for the courses of 2023. Pre-order them. 15% off, you know, relatively cheap. Link below. But let's go to the screen. Let's compare gold and Bitcoin, and then let's look at the market cap of cryptocurrency and where it could mean or where it could go in the future if it does go towards $10 trillion. So on the screen, we have the obvious. There's two charts. On the left-hand side, we've got gold, and on the right-hand side, we've got Bitcoin. You can see that, for obvious reasons, since November time, the market has been flowing up with both. Now, it's interesting to note that where this could go, and for obvious reasons, yes, it is short-term, but when you look at the S&P 500, not doing too great in the grand scheme of things, still in a downtrend. When we look at the NASDAQ, similar sort of situation. For over a period of time, these have been going up and they've been correlated. You can kind of see that. It's a very, very obvious kind of push to the upside. The markets are slowly starting to show some sign of life. However, still early days, but this is the overriding kind of thought process here. What if Bitcoin and cryptocurrency assets become a little bit of a hedge for the big money to put their money into something instead of just gold? Right, what I mean by this is a couple of percent of some big money could be going into the market, and cryptocurrency could be a vehicle for that. Interesting proposition. Remember, Bitcoin was born out of the previous financial crash. It has never experienced let's be honest here, a recession. Now, that being said, when we look at the higher time frames here, and we look at, let's just say, both of them, you can see that Bitcoin's had a massive drop to the downside, but gold has also had a bit of a drop, but it's kind of following it back into this kind of situation. Obviously, the drop in gold was nowhere near as severe as what happened with Bitcoin, but it's very, very interesting to know that how they're both recovering at the same sort of time. Food for thought, hey? Now, one final thing before I go is look at the total market cap in terms of comparing where it could go, which could be very, very interesting, right? So this is the total market cap of cryptocurrency, all of it, the entire market. We've dropped a lot. It's quite a good little fair value area, you could probably argue. Now, this is where it gets interesting. We talked potentially that maybe we could go towards $9-10 trillion, which is the market capitalization of gold, right? Let me just put that on the log scale so you can see it in more detail. Now, if that does happen, it's a monster run, right? It is a monster run. And this is the kind of outlook that you're looking at, where the market could absolutely run a very, very nice amount of money. Let's just say here, a 9x what it is. That will obviously mean more altcoins. That will obviously mean more protocols and stuff like that. Not just Bitcoin going up to the moon, not just Ethereum going to the moon, but they'll all go, as I said before, together in harmony because that's how the markets work. Usually in the stock market it's the same. If the S&P is bullish, a lot of the big S&P stocks are, let's be honest, bullish because it's an index, right? Cryptocurrency works in a similar sort of way. With confidence in Bitcoin, the market gets very, very interesting, and that confidence tends to flow into altcoins and it starts to run. I'm not saying this is going to happen overnight. It's a very, very bullish prediction. But when we look at the obvious here, gold has been around for thousands of years. Bitcoin and cryptocurrency assets have been around for a very small amount of time. You've got to look at the bigger picture. A lot of people are thinking that cryptocurrency is a scam. No, definitely not. There's some stuff that are problems, and that is a problem what we need to solve. But long term, we could be seeing for the first time that store of value in cryptocurrency assets in a recession could be useful. Anyways, if you enjoyed my stuff, leave a like, leave a comment, and check out these videos here.